If you want an LLC to own your next rental, should the LLC be the buyer on the offer, the borrower on the loan, or the owner on the deed, or possibly all three? Listen, put the wrong name in the wrong place and you can create financing issues, title issues, insurance issues, even closing problems. Hi, I'm Clint Coons. I'm an attorney. I'm a real estate investor, and I'm going to walk you through a deal from the offer through to the first rent check in this video, showing you how to set it up the right way. All right? Let's get started. Okay, so that becomes a problem that a lot of people ask me over and over again is, hey, how should I structure this deal? Because I want to own the property in a limited liability company. And it really comes down to, from the very beginning, what should you be looking at? Because here's where we are, right? There's three different things that we're focused on. We're going to call this the purchase agreement, or PA, right? Next one's going to be the loan. And the last one over here is going to be the deed. Okay, so where does the individual versus the LLC fit into this scenario? Because you might not have to be in all three positions when it comes to closing in a limited liability company on a piece of property. Now, the LLC, setting that up, so where does this really come into? First off, is right here. If you want to make your offer, you submit your offer in the name of a limited liability company and not your own name, then you most definitely have to have your LLC set up at this point in the game right here. And then it's going to follow us all the way through this process to the very end. Now, setting up your LLC to make the offer. What happens if you haven't set up the LLC to make the offer? Okay, well then don't put anything on there about an LLC. All you want to do when you make your offer in your individual name. So I'd put Clint Coons, and then after that I would put and or designated entity. So you write that in your offer. And if someone ever asks you, and typically this is going to come from a realtor, hey, why did you put this extra language in your offer? I would be upfront with them and I'd tell them this. Well, my attorney or my CPA has advised me to include that language because they are not yet sure where I should take title for estate planning purposes. That is, should I own it in my own name or do they want me to hold it in an entity? So I need that option in there. That pretty much shuts down any further inquiry if you use it the way I just described. Now, the reason you're putting that in there is so that you have now some runway in order to set up your LLC, and then you can close in the name of the LLC and you don't have to close in your name. That's why I put and or designated entity. So you're letting the seller know, hey, I may close on it in my own name or I may close on it in a company. And you're also letting title know that this is the way it was set up. If you don't do this, then you run the risk that you'll be forced to close in your own name. So if I set up my LLC after the offer was accepted, it's not going to help me there with closing. I'm still going to have to close in my individual name. Now, something that comes up right here about creating the limited liability company when you're setting this thing up. Where do you set it up? Okay, so I often tell people this. If you're investing in multiple states and you really don't know where you're going to find your next deal, I would always set it up in Wyoming. That's where I would set up my LLC. Because you can buy property in an out-of-state LLC. And eventually you're going to want to register to do business in that state, but it's just nice to have that LLC ready to go. You've set it up in Wyoming, you know where that's ready to go, and you'll just end up closing on the property and then moving the LLC to the state where the property is located. Now, if you're buying in just one state, let's say you just like to invest in Colorado, and that's all you invest in, then set the LLC up in Colorado and have it ready to go. So when you're at this offer stage right here, the purchase agreement, what I would be doing is entering into that in the name of the LLC. So if the LLC was Mile High LLC, then that's what I'd put on the offer, Mile High LLC. Now, could you use land trusts as well to take title to property, make offers in? Absolutely, you can do that. But the fact that what I'm talking about in this video is just using limited liability companies. Now, the lending phase right here. Now, this is where things can get tricky. And this is where you have to do some due diligence on your side, okay? Because if you're going to close in an LLC, if the LLC is going to be the one on title at closing, accept the deed, and you're getting a loan, all right? This is key here. If you're getting a loan, then you have to make sure that you're prepared the right way. Otherwise, you may get rejected by the lender. So what am I referring to here? So if I want this LLC to close in the name of the LLC, then I need to look for a portfolio lender, which is a community bank, or I need to look for a DSCR lender, okay? Debt Service Coverage Ratio Loan. That's what I'm looking for there. Both of those will allow you to take title in the LLC. So if you haven't figured that out yet, this portion right here, then on the front end here, always do this. Make your offer in your name and or designated entity, because you don't want to apply for a conventional loan, have the LLC on the purchase and sale agreement only to get to the lender and say, hey, that's not going to work. Now you got to go back to the seller and redo that purchase and sale agreement. And the seller could say, I don't want to sell it to you now because I've had another offer came in afterwards at a higher offer. I'm going to go back to that guy. So you have to be careful here. That's why I often tell people, you first need to line up financing before you really start making the offers. Of course, if you're buying for cash, that's not relevant at all, because with cash, it's just a cash closing. You have to deal with the lenders. So that's what I would be looking at here, is nailing this down, knowing that ahead of time. Portfolio or DSCR loan, put the LLC on the offer. If not, put your name on there and or designated entity. That's what we want to do. Now, with the portfolio or DSCR loan, so let's say that I'm able to close in the name of the LLC. So I've got my LLC set up here and my lender's over here. Okay, so they're going to allow me to take title in this LLC. So what does that mean? It means this, that at closing, the property will move from seller directly to the LLC itself. So the LLC will go on title. Now, the lender, when they provide me the loan, what the lender's going to do is they're going to record a deed of trust or mortgage, I'll put DOT, against the property. But they're also going to get a guarantee from you. You see, the title to the property is held in the LLC, but you're also providing the lender a personal guarantee, meaning that if there's a default and the lender cannot recoup what they've loaned the LLC by selling the property, then they can come after you for the difference. That's called a guarantee, personal guarantee. And that's what's going to happen. Now, once you've done that, then you can close in it. But you have to be ready to close. So the other thing that comes up, and oftentimes this is going to get dropped on you at the very end, I've seen it within 24 hours of closing. Oh, by the way, we need this. Here's what you should be prepared for. If you're going to close in an LLC, you're not closing in your own name, okay, you better be ready to go with this. Articles of organization. Okay, so to prepare those, you want to have an operating agreement for your LLC set up. And many times when I draft these operating agreements, I'll put there my business purpose clause. I'll state that the intent or the purpose of the LLC has been set up to buy, hold, control, own, sell, rent, refinance, and some other language, the real property located at, and I'll put the name of the property address in there. And I like to do that because it tells the underwriter that this LLC was set up for a very specific purpose and it's not going to be doing anything else other than owning that property. And the reason why that's important is because lenders or underwriters get a little nervous if they think, hey, we're loaning to a business that could be engaged in other business activity, and that other business activity might impair the LLC's ability to repay that note. So put that language in there like that, be very specific, and it will help you. The other thing you're going to need is what's called a cert of good standing. Now, you obtain this from the Secretary of State. So all this document tells the lender is that your entity has not been revoked. And I'll tell you what, it's one of the more stupid things that I've ever been asked of from lenders before is to give a certificate of good standing, because I set up the LLC 30 days ago. And how, in what world would the state revoke my LLC within 30 days? I mean, LLCs get revoked by the state because you fail to renew them. We are, in my example, 11 months away from renewal. But as frustrating as it seems, okay, the underwriter's just checking boxes. Do we have this form? Do we have this form? They're not thinking, okay? They're not in that position to think. They're just in the position to check a box. So give them whatever they need. Now, the last thing you're going to need, typically, the fourth thing is a resolution. Now, what does the resolution state? The resolution will state that A, the LLC is authorized to borrow money from the lender, and B, that you, as the manager or member of that LLC, are the person authorized to sign on behalf of the LLC to encumber the assets. So that's really important here, that you have all these things set up. So at the very end, you're like, boom, 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 here you go. You send them right over. And make sure they're signed. Okay, so that's the other problem I've seen people do before. They'll send documents over, operating agreements, resolutions, and they never signed them. Okay, then what is that telling the lender? Hey, this person doesn't pay attention to the small things that are important when it comes to running a business. So get that in place. Now, I just talked about closing in the LLC. Before I go on to the post-closing things that you need to worry about, what happens if you can't close in this LLC? What happens if the seller, right, because you're using traditional financing, transfers the property to you in this example, and then here's the lender over here. And so the lender, again, takes back a deed of trust against the property, and they also get a personal guarantee from you, a PG from you. So now you're on title. Now, obviously, we don't want that to be the case, so you want to move that property into the structure. So when do you move that property? That's a question that comes up all the time. Well, it really depends. I think at least you should season it for 30 to 60 days before you move that property in. Now, if you're concerned about the property, where it's located, the type of tenant in there that you think it has more risk, well, then definitely move it sooner. But I would give it at least 60 days of seasoning before you move, okay, before transfer. Okay, that's how I would handle that. In order just to make sure, because if the lender looks within the first 60 days, they still want to see title in your name. Or what you could do is this: set up a land trust. So if you're not going to go directly into the LLC, which you probably wouldn't because it has a mortgage on it, move it into a land trust. You could do that within 30, and I'd feel really comfortable doing that and moving that in right away, and then have your land trust owned by the LLC. And that's all hidden. No one sees this because the land trust is a private document. So that's how you would handle the property in a situation where you want to get it in the LLC and it fell apart because of the type of lender you're using. Then go to a land trust and put the land trust into the LLC. Okay, post-closing. After you've got it all set up and the property is now in a limited liability company, what are your next steps? Okay, because it's not just enough to get it into the LLC. You got to do some things here to make sure everything's taken care of. Okay, so let me just list them out. You want to make sure you have insurance, okay, on the property with the LLC as the named insured. That's important. Okay, the second thing is your leases. Okay, with your tenants, you need to update the leases, update the tenants, tell them where to start, making their payments going forward. So that's why you have to have a bank account set up in your limited liability company. Get that bank account set up so you can then deposit the rent checks into your bank account of the LLC. You also then want to make sure that you have good bookkeeping. So here's something about the bookkeeping. I'm just going to tell you real quick. At Anderson, we will typically handle between 11 to 14,000 tax returns on an annual basis for our clients, because we do both legal and tax here. We have CPAs and attorneys that work for our clients, just like you, if you want to become a client, to help protect your assets and reduce your taxes. But here's the thing. The individuals that do not have great books and records, they create problems for themselves down the road. That means they create problems when they want to obtain new financing because they don't have good books and records, and it creates problems to prepare tax returns. So I would highly encourage you to make sure you've set up bookkeeping the right way. Now, the other option we have here is if you're not self-managing, then you want to contact your PM, okay, your property manager, and make sure you get that all set up. So the property manager knows that if they're collecting the rents, they're to deposit the rents into this LLC on a monthly basis. And so that's the whole process right there, walking you through, A to Z on if you were going to take title in an LLC, that's what you need to be considering. And then once you've done it, make sure you tie up all the loose ends on the back end. Because if you don't do these things, what can happen, and I've seen this before, is that people create a great structure, right? Maybe they close in the limited liability company. They have everything right. They have anonymity, but then they don't run it the right way. The rent checks are still going to them from the property manager, right? They don't open a bank account in the LLC. So they're ignoring the form of the company, or they don't insure it the proper way. And then something goes wrong and it all falls apart on them. You go to the trouble to create a limited liability company, you're doing it to make sure it's going to be there when you need it. Don't do things to degrade that by not maintaining it the right way. Guys, I wish you the very best with your investing. And if you want to see more videos like that, be sure to subscribe to my channel. Take care.